The other big headline was the GDP growth, right? That accelerated to 8.4% in the third quarter, and there were some upgrades as well to Q1 GDP and to the full year GDP. But trends show a slowdown in consumption. Prashant, you've decoded some numbers for us?
Not to pour cold water on the generally optimistic tone, but I just want to take 2 minutes to explain that consumption seems to still lag, right? So GDP numbers are strong, but it's no thanks to consumption. Now, consumption is about 56-57% of the GDP, and it's one part which is just not firing. It's all investment. And, you know, this is the number which shows you that. Third quarter GDP data, investment growth is 12.2%. That's gross fixed capital formation. And consumption growth is 3.5%. So this is just this latest number that we got last evening. So what we've done is we've looked at total retail sales growth. So I've picked up data from a report from Spark Capital and the Retailers Association of India. And, you know, what we're doing is looking at the festive season in 22, festive season in 23, and the last data which we have, which is for January 2024. So look at this. Total retail sales growth in October to November 2022 was 11%, dropped to 7% in the last festive season. And in January, it's come down even more. The growth is only 5%. Now, let's actually get into some categories, right? Consumer durables and electronics. It's a steady decline. Actually, it's negative 1% in the month of January. October and November 22 was 18, and 23 was 9% or so. Look at apparel and clothing here. 12.5%, 6%, 2%. So steady decline once again. You look at footwear as a category. 21%, 10%, 4%. These are all very sharp declines as far as important categories are concerned. And pretty much all these categories have sort of listed listed companies which operate. Personal care, 7.5%, 9%, and now 6%. Last two festive seasons, and then the month of January. And of course, jewelry is the last sort of subcategory within retail, 18, 13, and 9. It's all going one way, which is actually lower. The other question is urban sort of discretionary spend also starting to slow down? It's not a new question in that sense, because QSR stocks, we all know, have been suffering. Demand's been a little weak, but you know, in the third quarter, Domino's Pizza, we saw the sharpest fall there in order volume since COVID began in 2020. United Spirits, I mean, and also, by the way, this is discretionary spend, right? Liquor volume was down 2%. This is the first drop that we've seen since 2020. And then Nykaa, which basically the number of orders grew 17%, which is slightly lower than 19%, the growth that we saw in the second quarter, in the prior quarter. So that's some data. Now, one obvious kind of culprit here is the weakness in the job market. Again, not something new. By the way, about a year ago, I put a similar kind of piece out. And we've been, I think, in a third year of a broad slowdown as far as the consumption space is concerned. So IT sector has shed about 64,000 jobs in the last 5 quarters versus about 3.7 net addition in the prior 5 quarters. Now, IT jobs, for the longest time, for the last 2 decades, have been a source of consumption growth, right? These are well-paying jobs, broadly speaking. And of course, the Naukri Jobs Peak Index is down about 15% since March of 2023. This is a barometer of sort of online hiring. And there are some other factors as well, perhaps, which are at play. And I think managements have alluded to this. I remember we were speaking with Mr. TTK Jagannathan of TTK Prestige, and we asked him why some of his categories are not doing, I mean, it's not looking strong. He said there is a slowdown. It's not as strong as he'd like it to be. And he kind of said one of the reasons could be that people are spending in other areas, travel and hotels, for example. And that ties in. For example, in the third quarter GDP numbers that we got yesterday, one of the few categories which actually subcategories which did very well is tourism as a space. And of course, interest rates are higher. We are all waiting for interest rates to come off, but that is maybe one other reason. So consumption, important, more than half of the overall sort of GDP, still struggling. The hope is that it will also start to pick up, because what otherwise will happen is that the other part of the market, which is investment, infrastructure, etc., people are going to crowd in, not just in terms of investment opportunities, and that kind of takes valuations unreasonably higher. Rahul, any thoughts?
Let's stick to the positives, I think. I understand, you know, the good part, of course, Prashant, is that the external sector is holding up. I think the converse to is you have a stable rupee, crude's between 75 to 80. And you've now got upward projections to GDP. I think net of all of that, I think I understand that tech sector. I mean, this is very similar to what's happening in the US. I don't know if you, I think one of the town halls that Elon Musk did recently, he's like, I'm not finding people in manufacturing. He's like, I don't understand what's happening on the tech sector, but he's like, our manufacturing side of the economy is doing really well. So I think it's in some ways it's playing out here, but. I
on
think
consumption, Rahul.
I was just coming. I think
Yeah.
the way India is consuming is changing, Prashant. I mean.
But textiles,
so
I mean,
if you-
apparel, footwear, I mean, you.
I know, but if you look at mass, it's out of flavor completely. I mean,
And
just
look at high-end consumption, right?
Yeah,
I mean, that's doing so well.
if you had told me a year back that Indian hotels would be at 600, I would have said you're
So
joking.
you're saying the last point that I mentioned, which is, I mean, travel,
Exactly.
tourism, hotels,
so
that's the
Luxury.
space which is.
I'll tell you, and maybe this is, a study you guys can do independently, and I'm just anecdotally, and this is just, it may not be a very large sample size, but a lot of youngsters I speak to, say between the ages of like 15 to 25 today, don't want to own a house, don't care too much about cars. What do they want to do? They want to travel the world.
Travel.
They want to stay in good hotels. They want very high-end electronics. So maybe the way India is consuming is different. And we're sitting in central Bombay and Lower Parel, and we're trying to gauge what's happening in rural India. Maybe that's playing out. Like look at V-Mart retail, right? Almost 70% of its stores are in UP, Bihar. But on the other hand, Zudio of Trent is doing so well. Trent is hitting a new 52-week high every week.
Yeah.
So I think the way India is consuming. So when you say consumption is slowing down, as a headline, I may not agree with it. I think the way India is consuming is changing.
changing, yeah.
And to that extent, I think.
But I'll tell you, consumption, which the CSO uses to, I mean, it includes everything. I mean, consumption growth, CAGR, this is a 4-year CAGR, and this number is as of 2023. The gap between consumption and investment, and this is GDP, I mean, so this includes everything, new consumption, old consumption, all kinds of consumption. The gap is about 5 percentage points. So there is and it's not just this year or the last quarter, etc.
So let me
I
reverse
take it-
something.
yeah.
Let me reverse something back to you, and maybe your viewers might find this educative at some level. Forget 1 year, 2 year, 3 year. Just let's look at 10 years of Hindustan Lever, right? Till the last concluded financial year, FY23. We still got 1 quarter to go here. Over 10 years, Hindustan Lever's top line has compounded by 8.8%. This includes volume growth, pricing, and premiumization. So what would the volume growth have been over a decade? You've gone through cycles. You've gone through Demon, RERA, GST, everything.
So what are you saying? You're saying good or bad? Is it
no,
good?
I'm saying that maybe the process of the change of consumption started a long time back. And I don't think staples...
And it's not factored into
Exactly.
the CSO
I mean,
assumptions.
Look
yeah.
at foods. I mean, are you seeing slowdown in foods? Look at the numbers that Tata Consumer, Nestle, and Britannia are giving you.
Food
They're
is the
so
category
different.
which is doing well.
Exactly. So I'm saying just what kind of consumption is happening. I mean, within QSRs, you highlighted QSRs. Just plot a 5-year same-store sales growth of Westlife versus Jubilant. You may be surprised that Jubilant, despite being a delivery model, has far more inferior, same-store sales growth to Westlife, which intuitively should not be the case because within that you had 2 years of COVID.
Rahul, they're shouting in our ear to take a break, so we'll do that. But good points, and thanks for that. We'll take a quick commercial break.